Your name itself is squeeze session, so you're
Session,
squeezing completely out of it. And now I get the point. Why squeeze session? Why squeeze session? So get someone and squeeze everything out of him.
Hi guys, welcome to the next episode of Squeeze Sessions with Galgal. We're very excited to have Mr. Mrinal Mehta with us today. He's a seasoned chartered accountant based in Mumbai with over 2 decades of experience. Please sir, introduce yourself.
Thank you Harsh and thank you Darshan for this interaction. I'm looking forward for interacting with the audience. I'm chartered accountant. I cleared in 2004, so experience of more than 15 years. The journey has been kind of very stable. I have not seen too much of ups and downs, though I would say that I did my articleship with a small firm and then moved on to a big four. I was working with the PricewaterhouseCoopers PwC as an audit team. But then I realized that, it's probably not for me. I made for my own practice. Then I came down back to own practice and then I joined a small firm and currently I'm partner with that firm. I'm specialized in GST, which is the goods and service tax. But we do a lot of other consultancy and advisory as well. So that's about myself and I look forward for the interaction.
This is amazing, sir, because you have gone through so many different industries. Like you have your own practice right now, your own business, but at the same time you worked at a private firm. So how is the work-life difference? Like right now you have this experience, you have started your own company, and before you were working at a big four, which all of us know it's the work is crazy over there. So how do you find this shift firstly?
The shift definitely was a bit of a tricky situation going from a smaller firm where it was more like a family team and it's more cozy there, going to a big four where it's completely open, you are on your own, you have to fight for your place exactly. So the working hours were very different, very stringent. The exposure was different. The major difference between working in a big firm and a private or a smaller firm is the exposure you get about the industry. Here there's more of a generalization and there is more of a specialization in a big four. So a big four firm, you have too much of a pressure, but then if you are able to handle it, definitely it's worth it.
Yeah.
You get to look at the international standards, lot of things which you definitely would not be able to see through when working at a smaller firm. But I would say that it's how you are made of. You're comfortable. If you're comfortable with this kind of an environment where you are a fast mover, Big Four is the one thing to go for. Personally, I was a bit on a own side where I wanted a bit of a work-life balance and do a lot of things other than my profession.
Right.
So that is what exactly pushed me to come out of a Big Four and start on my own, so that I can pursue some things other than my full-time profession.
And you're still so successful, sir. So I mean, this is like a great example of like in today's world how people say that no, you should always be working to be successful. But sir found that balance of doing other things apart from work and still managing to find success in life. So I think it's a great point to highlight.
So before we get into detailed subjects, can you tell us the process of becoming a chartered accountant in India?
So currently the Chartered Accountancy course is ranked as one of the most tough exams. The general perception about the course is such that, and it is in fact a bit of a tricky course where the passing percentage range from 5% to 15 or 20% at the highest peak.
Oh.
So, 15 to 20 people out of 100 attempting an exam just clear out. Another, it's a long drawn course with not a surety of getting out of the course with a degree. So once you are in a good MBA college, there's a very high probability you will get through. It may take a bit of a time, but in this particular course, there is a bit of a challenge where you may not go through.
What's the duration, sir?
So the standard duration is around 4 years.
Okay.
It's been varying a bit over the period because the institute, which is the Institute of Chartered Accountants, who's the alma mater of all the chartered accountants, has been improving the whole course study over the period. So they have been doing a lot of changes with the subjects, curriculum, the timings. The current course, which has been introduced just a year back, covers you can start after your 12th standard, which is the 12th grade. You can appear for the foundation. Once you clear the foundation exam, after a year and a half, you can appear for the intermediate. After clearing both the groups, there are 2 groups of intermediate, you are eligible for applying for an articleship. It's like a 2-year practical training,
Okay.
where you join a CA firm. You get exposure about the world and the actual world workings, and after the completion of those 2 years, you have to appear for your finals.
Okay.
So all in all, if you go through straight, without any additional attempts, it should take around 3.5 years.
Okay.
After your 12th. So simultaneously, for me, I had been fortunate enough to clear it through in my first attempt, and I was a chartered accountant at the age of 22.
Okay.
Just a year after my TY BCom.
Okay.
So that's probably the earliest someone can go through, and then its rest is up to you how many. But on an average, I would say it's 4.5 years.
Okay. So, sir, if like you mentioned that after 12th, now you can directly start applying for the Chartered Accountant course and do the foundation. Is it necessary for me to do BCom and then do the CA course, or I can jump straight?
It's both goes simultaneously.
Okay.
So you are pursuing your graduation along with your BCom CA course. It goes simultaneously. And there's an option of people who have already graduated and then they kind of decide to join in the course. Even they have an entry point there with certain exemptions. So they may not be required to appear for the foundation. They can go directly for the intermediate exams.
Okay. And is there a particular degree type that you have to do while pursuing your CA course, or you can, like hypothetical scenario, if there is a very smart individual who is doing, say, engineering, which is not related to accounts at all, and wants to pursue a CA course as well, is it possible, or there is a law that doesn't permit you?
No, definitely everyone, there's a threshold. As I said, the 10 plus 2 is one of the categories. Stream is not important. So someone who has come from a science background, opted for science or arts in the first and the second year of junior college, definitely they are also open to join the course. One of my article trainee, he had pursued science for few years. He could not kind of find interest in the same and switched back to CA, and he cleared CA in his first attempt.
Wow.
So it's open for all. The age, or maybe the 10 plus 2 is the first for foundation, and 10 plus 5 for the intermediate.
Got it.
But stream is not necessary. That should be good enough.
Got it.
So my next question to you is, what are the major areas of focus in chartered accountancy, right? Because when I look it up, it is auditing, tax planning, so management consulting, corporate finance, GST. So where does one navigate in so many subjects? And so let's have a conversation on that, right?
So traditionally, chartered accountants have been known for accounts, audit and taxes. That's what has been the trend over the years. So our institute is 75-year-old, so the course is 75-year-old. And the function or the focus has always been audit, taxes and I would say accounts majorly. Nothing going beyond that, but I would say that it's not just that is just a very small portion of what chartered accountants are capable and are actually doing through. So today, as we see a lot of fresh chartered accountants who are coming out, less than 10% or maybe 15% are going to this traditional practice.
Okay.
Most of them are going towards the unconventional areas, starting from consulting businesses for growth and conducting how to conduct a business. So a lot of CFOs, Chief Financial Officers, most of them are chartered accountants. They are the right person to guide any company in their financial journey, planning their finances, getting loans, and a lot of structuring happens. There is transaction advisory, where people who are trying to plan some mergers, acquisitions, due diligences, internal audits, statutory audits, so many areas. Financial side, banking, huge sector. I mean, there's a huge number of chartered accountants who are joining banks as a banker, as an investor, private equity. I can continue naming a lot of areas where people. These are the ones which are related to finances. So the course has almost 8 subjects, including law, costing. So someone could focus on the law side of it. Someone could go into the costing side of it, tenders. So I can go on a lot of sectors that we are capable to do. So maybe you can stop me whenever required. But that's what all areas. So in a nutshell, I would like to say that students who wants to pursue chartered accountant, don't think that you would be doing taxes and accounts only. It
Correct.
may interest you and you may do so. But there are a lot of n number of things you can do once you go through the chartered. And last, the curriculum or the format of CA course is such that it makes you so strong, or at least resilient to a lot of troubles or challenges in your life. So even if you may think of doing something different from your regular course, like entrepreneurship, a lot of chartered accountants, Aman Gupta being one of the biggest example of entrepreneurship after getting into chartered. So the course itself shows you so ups and downs, so many challenges you face during your course that you are ready to face the world once you are out of it.
Right. And finance at the end of the day is the blood of the business, right? Like you can remove all the other verticals in the business, but if you remove finance, the business does not exist. And you become versatile in this course. But sir, now breaking it down even further, if you see the lifeline of the government or the country can be said is tax, right? Because that's the major source of revenue for the government. But what is it exactly? And why do we as citizens of India have to pay tax?
Okay, so that's one of the biggest question. It's like taking a pie out of a cake. So it's always hard for someone to kind of, pull out something out of your hard-earned, earnings and give it just like that. Or maybe I would not say just like that, but it's more like an obligatory. If you given a choice, obviously no one would kind of
give it like that. Yeah.
Give it like that, exactly. But we should understand, let's start with what is tax basically. So Manu, in its manuscript, the highest law maker of as per Hindu scriptures, Manu has said that the taxes should be like taken in like little by little, like a bee, like a calf or a leech who eats little by little. So the king or the government should tax the citizens little by little, progressively, on an annual basis. So that's what is
according
there
to our
in
scriptures.
So tax has not been something new. It's been there for ages, including ancient times. Before going to that new and old debate, let's understand that the Indian taxes are, or the Income Tax Act per se, has been voted as most complex act around the world.
Around the world?
Around the world. I mean, it's kind of a survey, or it is that, because there are two major reasons to it. One, Income Tax Act has been in place since 1961. Though the original income tax came in 1860 by the Britishers, the formal one, and which was amended multiple times. The 1961 Act after the independence has been in prevalent till date, but every year there's a union budget. So how taxes work, all the law around the taxes is that the base act of 1961 has been amended over the years. So every year once the budget comes, what the government does is it makes changes to a lot of sections by way of notifications. There are a lot of additions, deletions, amendments, and because of this, certain amendments have been taken back, certain amendments have been given at a particular point, but having a retrospective effect. So for example, some act has come in say 2000, but it says that it will be applicable since 1961. So what happens is, because of these issues, the act has got so complex, there are multiple facets to it, to the Income Tax Act. Tax is required for the general growth and maintenance of a country. There are a lot of services which we as a citizens are obliged, and we are actually using this as our right. So when you say that there's some potholes on your road, that, you're not getting water timely in your supply. So how does these things get to you? Or how are these services reaching you? The infrastructure, we just saw that huge infrastructures are being built around the country. There's this new Atal Setu which has come, which is a kind of a master class infrastructure in Mumbai. How these things come up? It's all by the money which is coming from the taxes. So as a citizen, we are complaining, or maybe we feel it a bit hard to go for taxes, but yes, taxes are required for, I can summarize it in major 5 areas. One being infrastructure, then there is education, public health services, major challenge where government is responsible for maintaining a lot of public health services. Then there is security, which is a very huge expenditure out of the government's budget. Security internal as well as external. So all of these services are covered and managed by the taxes we pay.
Got it.
So most important to pay your taxes on time.
Right.
And what happens if you don't pay on time?
Definitely, the scenario has changed over the period. If you don't pay up, government has your kundli. A lot of things are known to the government, and there is a lot of automation now. Earlier, there was a perception that you would not get caught, or I've seen a lot of clients कि यार अम्बानी को पकड़ेंगे, हम तो छोटे हैं, हम 10 लाख 5 लाख, we earn so small, why would we get caught? But it's not that. Now even a people or a person earning 2 lakhs, 3 lakhs, we have had cases where people earning not more than 2 lakhs, 3 lakhs an annum have got income tax notices.
This is because of the digital oversight?
This is because you are not complying in a way which the government intends to. So it's not something when you get a notice, there's a person that you are a defaulter. It's not something like that. You may not be a defaulter, you may not be conversant with the right thing or right reporting. So the important point is to report it rightly. So when you say you don't pay taxes or you don't file your return, government has those data. There is automated notices being issued. So the chance of getting a notice is much higher now. Government is maybe I can discuss it in detail later. The use of artificial intelligence.
Okay.
Government is using it extensively.
Okay.
So to be in a nutshell, no one is kind of be able to escape per se, though there may be materiality concept when it comes to like what kind of taxes you are trying not to pay or forgot to pay or you would not comply with, but very high chances you would be caught somewhere.
Right. Correct. And the taxes basically can be broken down into two types, right? Direct and indirect. So if you want to touch upon that and educate the audience, what are the direct taxes that they have to pay versus the indirect taxes?
Okay. So basically, in India or the world over, there are two types of taxes, direct and indirect. The name itself suggests that in case of direct tax, the compliance requirement as well as the burden of tax, the one who's paying or taking the hit of that tax is the same person. So you are supposed to pay the tax and even comply with that. Versus an indirect tax, under indirect taxes, the compliance is put on someone else and the ultimate burden is something on the other person.
Okay.
So for example, under income tax, which is a prevalent taxes which everyone is aware of, is where you are supposed to assess your income annually. There are rates specified for taxes and part of your income, what you earn, it's not on gross revenue, it's on the income. So what you earn out of your business profession salary, you pay a part of it to the government as your contribution. So that's one way of paying it directly to the government. Under indirect taxes, the taxes are levied on the day-to-day usage of goods and services. So all of the goods, services are subject to certain taxes which are collected and paid by the business community, the traders, manufacturers, but the hit of it is taken by the ultimate consumer. So that's the indirect tax side of it.
So GST would be an example.
Yeah, good question. So now indirect taxes, GST is what we are seeing now, but this has just come around the corner. I mean, I would say it's introduced in July 2017. But the taxes have been around for ages. Direct tax being the one which has been there in the ancient times when the king or those rulers used to take up in kind, which could be grains or gold or something. So that's direct taxes. Even indirect taxes were there, even pre-independence, post-independence, where customs, salt tax and everything. So GST is what we are seeing now. The current generation is going through the GST. But GST has come after a lot of taxes and disadvantages what we've seen over period.
Okay.
Major being the excise, customs, sales tax, VAT. So there was a multiplicity of taxes. More than 17 to 18 taxes were abolished after the introduction of GST. So this is like a consolidation of a lot of separate taxes. So one of the greatest example is the GST.
So these taxes, like the 17 taxes that were abolished, why were they set up in this way? Was it because after independence, each state had its own set of rules, so they had to apply their own set of taxes? Was it because of that?
Yes. So GST, the major reason for introduction of GST and abolition of the previous taxes were majorly two. One being multiplicity and difference in the regulations. So India is a sovereign country where there is a demarcation of collection and the responsibility of collection tax between the center and the state. So the Constitution of India gives the right of collecting certain types of taxes to the center, and there are rights allocated to the state for collection of certain taxes.
Okay.
So like petrol example, that's a state tax. So the responsibility or the right to collect the tax on something is with the state, and this is very clear in the Constitution. Because of this, there was a clear demarcation and hence different taxes. So for example, manufacturing was under the center's side. So there was excise and service tax which was collected and monitored by the center. So GST is what we are seeing currently, but it was preceded by multiple taxes between the state and the center. As I said that, a lot of taxes are allowed to the center to be collected according to the Constitution, and a lot of taxes are allocated to the state for collection. Now, if you take an example, to have what are the multiple taxes a good would go through in its life process of reaching ultimate customer. If I start with a simple example of a shirt or a fabric or a ready T-shirt. Now, it would start from the yarn, which is it's a thread which is produced. The yarns are converted into a grey cloth by the process of weaving. It goes through the dyeing and it comes out as a finished cloth.
Yeah.
It then goes for stitching. It comes out as a ready to wear accessory. Now, if I look at the stages of this manufacturing, to start with, excise was the first point of tax, which is on the manufacturing. So once you manufacture a good and the first point of sale, that would make it liable for excise.
Okay.
So excise was on the manufacturing. Once it starts its channel for the reselling part of it, so a finished product, when it goes to the market, it passes through the distributors, then wholesalers, retailers, and then ultimately it may reach the consumer. So this channel of resale, where it passes one hand, originally it was sales tax and the central sales tax. So there were two taxes, the state tax and the central sales tax, where they shared the revenue on this transaction. The state would share the revenue if the goods are going outside a particular state, and if there's a trade within the same state, there would be a sales tax.
Okay.
The sales tax was then included or maybe merged into something called VAT, which is called a value added taxes.
Okay.
So as I said, the introduction of GST had two reasons. One was multiplicity of tax, and the other biggest reason was non-transfer of credits. In very simple words, if I say for example, I am a trader and I buy goods and I sell them in the same form. It's like a retailer. So when I'm buying a particular good, I would have paid taxes on it at the time of buying to the vendor. Right. So the vendor charges me X 18% of tax on my goods. So he would charge me 118. So in a very formal or a very basic thing, you would say that 118 is my cost.
Yeah.
And then maybe I may mark it up with say 20% and I sell it further for 120 rupees. And I will charge further 18% on it. Now earlier, because of different taxes, the tax which I paid to my vendor, I was not able to use it for discharging my taxes when I collect it for someone. So it's like an offset mechanism, which was not possible earlier, because a lot of taxes are monitored separately. Someone was monitoring state, someone was monitoring center, and there were different taxes. So GST's purpose was to allow a seamless flow of credit from start to the end, and the major advantage of this was avoiding the cascading effect. The word is cascading, it's not a jargon, but it simply says tax on tax. So when I say if I take 118 as my cost and I'm not allowed a benefit of that 18 rupees, so it forms part of my simple cost.
Yeah.
What I would do is I would try and inflate my selling value so that I'm able to recover that 18%, and I would charge margin on my 118, which leads to inflation. So basically, when I sell it, I would charge tax on the earlier tax.
Right.
But say for example, if government allows me to use that 18% and say that okay, your cost is just 100, you use that, collect that 18 rupees, and when you sell it, whatever tax you collect from your customer, you offset that thing. So for example, you are charging 18% on 120. Whatever taxes you collect, you offset that previously paid 18 and pay only the difference to the government.
Right.
So in this whole process, what advantage you are getting is that your cost is reducing.
Yeah.
So there is no inflation. there is no cascading effect.
Right.
So that was the challenge in the earlier scenario when there were multiple taxes, multiple rates, multiple states charging differently. So there was no flow of credit between the two states. When I'm already on the discussion on the flow of credits, a simple example could be interstate versus intrastate. A trader who's trading within the same state, I'm buying from Maharashtra and I'm selling within the Maharashtra. The Maharashtra government would be fine in giving whatever taxes credit they have received in the first stage at the second stage. But when the goods actually move out of Maharashtra and the trade is between Maharashtra and Gujarat, the goods are moving out to the Gujarat. Now the Maharashtra government and Gujarat government will have a conflict. Who would get the taxes on that leg of the transaction? So there were always a challenge in passing on the credit, and in turn, because of this, the credits were not available and it led to inflation. So so to overcome all these issues, one major other factor which led to the introduction of GST was octroi. So as I mentioned that excise is one thing at the manufacturing part, VAT and sales tax at the resale part. The third leg was the octroi. I'm not really sure whether my audience who's listening could be of age of 18-20 would have heard about octroi per se. But the senior generations, octroi was a dreaded tax simply for two reasons. Major, that it was an entry tax. So octroi was levied when goods were moving from one state to the other. So at each border of a state, there were check nakas. And the octroi officers, you need to have a pass or a tax receipt to cross the border from one state to the other. So when goods are moving from one good state to the other, you are levied a taxes to enter the other state. Because of that, there was a huge backlog or a traffic, or I would say delay in transit of goods. There was huge corruption or some kind of a challenges at the border checkposts. This led to delay in transit, higher cost, higher fuel cost for the industry. And always, it discourages movement of goods. So that has been abolished, and now it's a seamless flow of credit and the transit. So goods which are now moving from one state to other need not wait at the checkpoints. Though there is a bit of a control by way of e-way bills and certain other documentation, but it's more from monitoring purpose and not on a complete basis. So after the introduction of GST, this is one of the greatest advantages where the time of transit has reduced, the cost of transit has reduced. So going back to the initial question that there was excise on manufacturing, then there was sales tax and VAT on trading, there was octroi at the entry point. Major other tax which was subsumed was the service tax. Service tax, as we were discussing about the manufacturing and about goods. Now, the people who are providing services, it could be starting from freight, consultants, it could be anything what your freelancing. Freelancing is a major service what we are seeing right now. Professionals, anything which is other than goods was a service. And there was a separate service tax which was monitored by the center. Conflict between goods and service has been a legacy challenge for the courts. Over years, there have been huge number of cases for conflict between whether something falls under goods or services. As for an outsider, it is very simple that this is a good and this is a service. But the laws in India are not such. They are so complex that there were multiple case laws on this. Huge litigation, which is now been settled by introduction of goods and service tax, which says that same tax on goods as well as services. So though there is a bit of a difference in the rates and the classifications, but the monitoring of the taxes in the one window. When I was speaking about the flow of credits, so as a chartered accountant, I'm a service industry person. Now, while I'm giving my services to my clients, I would be charging service tax and paying it to the government. But while giving that service, I consume a lot of goods as well, starting from stationery. It could be computers, servers, office equipment, softwares, ACs, lot of stuff. I would be paying a lot of VAT and service tax on the goods which I'm using for actually providing my services. But because these were two different taxes, I was not getting any benefit. So whatever taxes I paid on the good side of it, it was a cost to me. So no benefit. But today, after GST, I can pull out any goods, you know, and I can use subject to certain limitations. I'm able to use those credits.
You get a rebate for that.
I get rebate for it. So I get a credit for it basically. So I can use it to discharge my output liability.
Yeah.
So this abolition has created a lot of synergy in the businesses. I'm really sure that, you know, barring the initial hiccups of introduction of GST when it was a new tax, after almost 5-6 years of GST, it is now settled and industry has accepted it. The proof of it is that the GST collection has, you know, the monthly collection of the government is more than 1 lakh crores a month. So that's huge taxes what government is collecting now.
Yeah.
Now we are getting closer to the year end, right? And a lot of people will be like filing for their tax returns. So the government has introduced a set of policies in the recent budget. When someone is deciding to file for their taxes, which tax regime should they choose? Should they choose the old tax regime or should they choose the new tax regime?
Major question. Everyone has been confused over last 3 years after those multiple taxes. So as I said, one of the most complex act. So there would not be any straight answer to someone to say that, okay, new tax regime is good for me or the old one is good for me. It's basis someone's sources of income. So for someone, answer could be new regime, but for the same person in a different year it could change.
Okay.
Or two employees of a same entity could have a different answers.
Personalization is required, right?
Personalization is the most important.
Yeah.
So definitely for income tax, someone choosing to say that, okay, one of your friend comes up and tells, yaar, मैंने old regime select किया है, must tax बचा है. But it's not that way. It would be for his personal finances based on his sources of income. So each individual, each year is a different analysis.
Okay.
So now there may not be a straight answer, new regime, old regime, but let us break it down into how someone could move around. You know, just in the same question you mentioned that we are approaching March and people will be filing taxes. So a bit of a general answer that a lot of people may not be aware that we are actually not filing taxes in March.
Yeah.
March is a financial year end. So basically taxes are filed for a particular year. So the year being April to March. So it is a year which is determined for the used for, as a benchmark to calculate your revenue. So you need to calculate your revenue, calculate the taxes and discharge those taxes. So March is actually a year ending process for that particular year where you have to complete your workings, but the actual filing of returns or the reporting the same to the government happens after March. Current due date for people who are not under business or audits is the 31st of July. So to make it a bit simple, by March you need to plan your taxes in advance so that you invest, you do a lot of things which could help you save taxes before March, because once the year ends, you can't do anything previously. And then once the year ends, you sit down, assess your income, assess your taxes and file the returns by July. So the due date to file the return is July and to plan your taxes is March. So for new and old regime, I would now kind of go in a bit deep there. So the major difference between the old regime and the new regime is the allowability of various deductions and investment incentives. The new regime has been introduced just last 3 years back. Prior to that, there was just one slab. And to incentivize investments, to incentivize people to make investment savings, invest in your insurance and everything, government thought it fit to give tax benefits. So say for example, if you put your money out of your earnings into LIC or PPF, which are a long-term savings, government wants to incentivize you, and that is where they give you certain deductions so that you invest in something, and because you invested, you provide us the proof and you get tax basically discounts. It's like something like the current e-commerce platforms where you do something and you are given some discounts. So you know, exemptions, deductions, you can treat this like a cashback or a
buy two get one free.
Something very similar to that, where government gives you a discount or a cashback. So you are buying a mobile, you are doing a timely payment and you get that 1000 cashback or something like that.
But you need to invest every year.
Exactly.
Right?
So each year, so going back to that question, that each year is separate in itself, each year is assessed separately, it is taxed separately. When I say each year, it's April to March.
Okay.
So for example, government had given a lot of deductions and exemptions from your taxes, and you avail those, you invest in those, and you get those reductions, and your tax impact reduces. You get a lot of benefits out of those. But the rules were very complex. There were multiple such deductions and exemptions. There was always a challenge among the taxpayers saying that these are so complex rules, regulations, how do we comply with it? We don't want to do all those stuff. The generation X, Z, new, I don't know the terms, but there are a lot of Gen X or I don't know generation, the recent ones. That traditionally people were having that investment mindset, but currently people feel that nahi, mereko invest karke mereko nahi chahiye baggage. I want to pay off my taxes and I want to have my money for my disposal. I don't want terms and conditions applied, something like that. Just tell me how much I have to pay, I'll pay it off and just leave me around. I don't want to say कि मेरे को 4 साल तक पैसा block करके रखना है. I can't withdraw my money, I can't use my money, there are restrictions on it. So for that purpose, government said, okay, let's do it this way, let's make it simple. Don't avail any of those exemptions. You can't avail all those deductions. There are specified ones which you are not eligible to avail, and we give a discount. Let's not reduce those deductions, but we reduce your tax rates itself. So to make it simple, you just give us your income. These are the lower rates of taxes, but you won't get benefit of any deductions, and you pay simple taxes and you are through with it, which is for the current generation. Exactly what the government is progressive. They understood the need of the current generation and they gave an option. Currently, both of the options are live. They could have made it permanent, but there's a huge chunk of taxpayers, the oldies, who have invested a lot in a lot of investments. So yes, old and new, the major difference is the deductions and exemptions, which eligible under the old, but there if you are getting deductions, the rates of taxes are higher. Here you are giving off, you say that okay, I don't want that cashback. Flatly tell me कि ये इसका रेट क्या होगा, तो यहाँ पर आपके मोबाइल का रेट घटा दिया है ई-कॉमर्स ने, ऐसे टैक्स रेट घटा दिया.
Got it.
So last call, if you want to decide old or new, it is year on year, person to person. You need to sit down, you need to calculate it on paper saying that these are my income sources, these are the tax rates. On the both sides you compare the taxes, and if you are not a business entity, you are free to choose either of it which is beneficial to you.
Amazing.
And you know, when we talk about this and the freelancer economy, you want to touch upon the tax slabs that each one goes through, if you don't mind. Yeah.
So when we saw about the new regime and the old regime, we discussed that there are certain deductions which are available in the old regime with higher rates of tax, and under the new regime there are lower rates of tax without any incentives. The basic thresholds are different, starting with, for the old regime, it's the 2,50,000 threshold which has been there for since few years. For the new regime, it's at 3 lakhs of rupees.
Okay.
Now, how Indian tax rates are for individuals are not a flat rate of tax. It's on slab basis. The reason being that you pay higher taxes if you earn more. If you are earning lesser, government wants to tax it at a lesser rate. So as and when you reach each slab, you are taxed at higher income on the incremental income. So for example, if you look at the old slab, the first 2,50,000 is exempt, so you don't pay any taxes. Anything above you earn on 2,50,000, you pay at 5%. That 5% is applicable up to 5 lakhs of rupees. Then the next slab is immediately 20%, which is up to 10 lakhs.
Yeah.
And the higher rate of tax, which is the maximum rate 30%, applies after you cross 10 lakhs of annual income. That's the old regime. Only 3 rates of tax is applicable. Under the new regime, they have made it, staggered it further, down. So after change of every 3 lakhs, there's a incremental tax of 5%. So, starting from 5%, then 10%, 15, 20, 30, after every change of 3 lakhs. And it's not that once you cross a threshold, the whole of your income is subject to that highest rate. So, for example, let's take an example, very simple example under the old regime, for example. Your income is, say, for at 8 lakhs per annum. So, we split your 8 lakhs into parts. So, the first 2.5 lakhs is zero, you don't pay anything. From 2.5 to 5 lakhs, you pay 5% on that batch of 2,50,000. From 5% to 8 lakhs, which is that 3 lakh batch, you would be subject to 20%. So that's what the old regime, and similarly under the new regime, as per the tax rate, you would pay incremental taxes. This is the base tax. If you exceed certain threshold like 50 lakhs, starting from 50 lakhs, there's a surcharge on the tax. So the amount of tax what you are liable to pay, you need to add 10%, 15%, going up till 37% for incomes above 5 crores. So those surcharge is applicable on the tax amount. So the process is that you determine your first tax amount, then add that tax with that 10% or 15%. This surcharge remains with the same concept that if you are earning higher, you pay higher taxes. As and when you grow higher slabs, you pay higher tax rates. So you contribute more towards the society. There's an education cess of 4%, which is on the tax rates. So the tax amount plus 4% on the tax amount will be added to everyone. So we've not now discussed the basic threshold limits, the rates of taxes. There is this one concept of rebate. It is similar to online shopping where you get tax discounts or cashbacks, where say for example the tax starts from 2,50,000, but government came out with saying that okay, let's not reduce this threshold, increase this threshold above this, but if you are someone who's between 2,50,000 to 5 lakhs of rupees, 2,50,000 to 5 lakhs, you calculate your taxes, but at the end of your return, I will give you a discount of 12,500, which is 5% of that 2,50,000. So in a nutshell, if you are below 5 lakhs, you are actually not paying taxes.
Yeah.
So you first show your taxes and then take that discount and you are out of it. You are not paying anything. But let's understand someone who has crossed that 5 lakhs. So say 6 lakhs rupees. So for that 6 lakh person earning 6 lakhs, you would not calculate tax above 5 lakhs because that there's always incentive, but you start calculating for 2,50,000. So the whole slab applies to you as is varies basis. But if you are below a threshold, you will be given a discount. Simple to say. So in jargon, you say rebate. In general parlance, you say discount.
Yeah.
So if you are below a certain amount, you first show your taxes and you take a discount out of it. Similar rebate is available in the new tax regime as well. Currently, tax rebate for old is 5 lakhs. So if you are below 5 lakhs, you would not pay any taxes. And for the new regime, it is 7 lakhs of rupees. So if you are below 7 lakhs of rupees, you would not be paying taxes. So this is the process. There are separate thresholds for senior citizens. So for example, if you are above 60 years of age and below 80, your threshold goes from 2,50,000 to 3 lakhs.
Okay.
And if you cross 80 and you are still alive and hale and hearty and earning income and filing your taxes, government exempts you up till 5 lakhs of rupees.
Okay.
So these are the thresholds for corporate individuals. So now that we've discussed that old regime has a list of deductions but higher taxes, new regime no deductions but lower tax rates. Old regime major deductions which are available, starting from say for example a person who's a salaried employee, he would be getting HRA, which is house rent allowance. So someone who is invested, he's not bought his own house, but he's staying on rent. So whatever rent you are paying, in metros, most of the Gen X are not interested in investing in a real estate, but they would like to be free and roam around and stay in rented premises. So the rent what you pay is eligible for a deduction. So your salary income gets reduced to a certain extent basis certain calculations, and you get a benefit out of it. So HRA is one. Then there is leave travel allowances. So if you've seen your pay salary slip or something, there will be multiple breakups of your total CTC, which is your gross salary. One of it, the factor is HRA, one is LTA, which is leave travel allowances. So in a block of 4 years, you are allowed to travel, take a vacation, and whatever certain expenses of travel you pay, you are allowed as a deduction. So you get a benefit out of vacation also. So that's few out of your salaried allowances. Now under old regime, you get a reduction of your gross salary. So the taxable salary becomes lesser and a lesser impact of tax. This is as far as salary is concerned. Then there are certain investment deductions, like the section itself says 80C or chapter 6A under income tax, which gives benefit of lot of investments. To start with, the common ones are the LICs, the Life Insurance Corporation, the PPF, which is a public provident fund, There are tax saving mutual funds which are called ELSS, equity linked savings scheme. So these are all tax saving mutual funds. So to make people invest in equity and to boost the equity market, government came out with this incentive as well. Then there is national pension scheme, your tuition fees of your children, school children tuition fees, mediclaim insurance premium, donations. If you make donations to charity trust, recognized charity, not every charity trust, but certain recognized charity trust, you get deduction or tax benefit out of your charity also.
Even uniform allowance, right?
Uniform allowances, education allowances for children. There are multiple allowances which are allowed. As I said earlier, there are rules and regulations when and how much you would get this as a deduction. So these are a bit complex calculations, each having its own terms and conditions, but once you meet those terms and conditions, you get the tax benefits. So overall, these are the major deductions which are allowed under old regime, which will go out of if you opt for the new regime.
Got it. And now, sir, if someone doesn't have the knowledge of this whole scenario that you just explained, and a hypothetical person who has just entered into the Indian workforce, probably doesn't have any knowledge in taxation or accounting, is probably from a science background, and that person wants to file his taxes and wants to understand what's the best way for him to file. Where does he find this information, A, and what would be the right sources or the right initial steps for him to start his tax paying journey?
Superb. This is one thing which every youngster who's just come out of the college, in fact, not out of the college, I'm hearing and I've seen people who are still in college and started earning, the influencers, the freelancers, so everyone is earning now. So simple, if you earn above a particular threshold, you need to pay taxes. Government has not exempted anyone per se, so there's a threshold. So annually, if you are earning, making some money, it could be anything. It may not be a formal job. You need to pay taxes. So how do you start with paying a taxes? Traditionally, there was a concept of maintaining a file. Mera file hai jo CA ke paas hai. There was a file concept. That was a bit of a traditional one where there was a proper formal physical file which was maintained year on year. But things have changed completely. Much simplified now. The taxes are simple. There's no kind of a jittery or some kind of a tension someone should take. A lot of information is available. So let's see how someone can start with. Let's start with an example of a graduate who has just come out of the college. He's looking out for a job. Simple, a very plain, simple vanilla. He gets some campus placement. He joins a job, some industry. There's this plain vanilla case where he's joining an industry as an employee. He would be getting his salary month on month, and whatever monthly income he's getting, he would be using it, part of it, and part of it obviously he would be investing somewhere. To file your taxes, if you are a salaried employee, lot of taxation is handled by your HR. So if someone has seen the salary taxes or salary slips, you would be getting a form 16 or a TDS certificate or something like that. So your employer would take care of the taxes on your salary. So government has introduced it's actually been there since ages, a concept called TDS, which is tax deducted at source. So the source itself, which is your employer, would pull out the tax of your salary and pay to the government. So your taxes has actually reached your government if you are a salary employee on a month-on-month basis. So that's one. Two, but the income which is other than your salary, which is your interest income, you may invest in shares and get some profit out of it. You may invest in cryptocurrencies. You may do a lot of other stuff other than your employment. Now, those are the areas where the taxes are not either being deducted at source or they are not regulated. So, to tackle that at the year end, so by March, you have your incomes straight, then you have 4 months, April, May, June, July, to calculate your taxes and submit a return of income. Now, let's understand what is a return of income. It's a simple statement which government expects from a taxpayer, saying that okay, during this year, which was April 23 to March 24, I have had these 5 heads of sources. I have earned this much. I would say this is my gross total income. I would then take benefit of some deductions, if any, then I come down to a taxable income, which is total income, which we call it in legal terms. On the total income, there are slab rates, which are on basis of various amounts of slab, say 2.5, then 3, and there are multiple slabs. We may kind of touch it up separately.
We can display it on the screen right now.
Okay,
yeah.
So maybe we can now touch it up, but before going to the slab rates, I will just complete the flow of how taxes are returned, and then maybe we can go deep dive into the rates of taxes. So at the end of the year, once the year ends, I need to sit down, prepare my statement of income, calculate the taxes applicable. So then there is an annual tax liability which I am supposed to pay to the government. And lastly, I have to show the discharge of those taxes to the government. How have I paid it to the government? So I was supposed to pay X amount of taxes. Out of that, some portion my employer has already paid to the government on my behalf, which the government will, your employer will give you the details. So you reduce that amount from that. So because that has already been paid, and the balance, if any, is required to be paid at the time of filing the return. So say for example, after, as I said earlier, that your tax on your salary is already covered by the employer, but tax on your other sources are not covered, so you need to now pay it. So you calculate that, you make a payment through a challan, it's an online, everything is online completely, and your balance tax should be 0, or there could be cases where there is a higher tax deducted. For example, you may be eligible to certain exemptions, but the source has deducted higher rate. So then there could be some excess tax paid on your behalf at the year end, which you can claim it as a refund. So the return of income, which we, मैंने return file किया, मैंने tax file किया, it is a simple statement of your annual income, the taxes and the discharge of it. And you submit it to the government. That's the return filing process. The due date is July, as I said earlier. And after you submit it to the government basically using a lot of computerized softwares, AIs and a lot of other mechanisms, they verify that data, what you have reported on a self-assessment basis. The whole tax structure based on a self-assessment. So you have to own out, you have to own it up that, okay, I am liable to this taxes, report it to the government. If their systems point out that there is an anomaly or a mismatch what you are saying in your return and what data we have from third-party sources, that is where the start of notice and scrutiny happens. So whatever taxes you file, a government will verify it with its own sources or the data which it has. If there is a major mismatch above a particular threshold, they would send you a letter saying that we found some mismatches, you please clarify. Or if there is a correction to be done, you file your revised return and pay the appropriate taxes. They give you a chance. Or if there is a certain kind of mismatch, you can give clarifications. Okay, what you are saying is wrong, what I am reported is right. And then it gets closed there. And in cases where there is a high value transaction or higher mismatches, government can open that particular case for scrutiny. So that's where the scrutiny comes up. So all this process is a year and year. It may seem a bit complex when I just kind of explain the flow, but because of the online filing features, things have streamlined. Lot of data is pre-filled into your return. Government itself has come out with a lot of easy to use utilities. It's both offline and online, available on the government's website. So this is the basic process. To conclude, if someone wants to start filing a return, if that person is a bit, I would say interested or intrigued to understand the taxes and wants to do it on his own, lot of tools are available to do that. If not, then a best practice is to approach a practitioner, a tax practitioner, who would help you file your taxes.
Right.
So if the best suggestion is, if you are starting fresh, you do not have a tax background, you do not have a finance background, you are from science as you started the question with, the right approach would be to, in the initial years, take advice of a tax professional. Because most importantly, as I explained, if there are any mismatches, non-reporting, misreporting, short reporting, the hassle of getting the notices and replying to is much higher than hiring a professional to handle your taxes. But someone who's from a finance background, tax background, and having a basic knowledge would find it easy to use those tools and file their returns.
So what would be some of the tools?
Okay, So, from the question what we started discussing is there's a novice who has just started filing his returns or wants to start filing his returns. The tools, lot of tools are available. The first one point of contact would be the government's website, which is the income tax e-filing, incometaxefiling.go.in. That website itself, which is the government's official portal for filing our tax returns, has come out with multiple tools. So there are both options available. One is an online tool and one is an offline tool. So in the online tool, they have, before starting your return, you need to create a profile. So your PAN and Aadhaar are the two proof or the point of contact with the government for filing your taxes. So if you create a profile on the income tax using your PAN card and Aadhaar card, there are authentications, level of authentications through OTPs, where you would be able to create a particular profile. Secured, the whole process is pretty secured through use of multiple OTPs, usage of your secret questions, answers. So once you create a profile, you are now a taxpayer in the income tax record. So that's what the first stage to start with. Once you create a profile, there are a lot of reports, something very similar to what you have on your bankings or trading apps, where after you create a profile, they track your investments. Similarly, government gives you a lot of reports about your taxes and income. So you can assess your AISs, your 26 ASs. These are certain reports. It's a jargon. AIS is like an annual information statement.
What does it show?
Your AIS would show you all your high value transactions. In fact, not just high value transactions, I would say all of your financial transactions, starting from the list of your bank accounts. So all of your bank accounts, as you are aware, are linked to your PAN.
Yeah.
So by default, government has that data. It would have the data about your savings bank interest, your fixed deposits. So all of those banks are reporting the interest incomes of all of their account holders to the government through one of the returns.
So DMAT also is linked?
Yeah. Exactly. Yeah. So DMAT is linked to your PAN. So the AIS will have a detailed list of all your trades. It could go into pages if you are a regular trader.
Correct.
Including the details of each script, the quantity and the value you traded, bought, sold.
Everything.
Everything.
So your financial
transactions.
Yeah.
So your saving banks are available there. Your mutual funds are available there. A lot of mutual funds, wherever you are investing, it is linked to your PAN and the data comes up there. The transactions during there, when I say AIS, it's an annual statement. So during that particular year, you can go back to any of the previous years as well. So mutual funds, one of the biggest challenges is your credit cards. Your credit card transactions annually, there's a threshold of 10 lakhs, which is for the credit card holders. So any transactions by a particular individual above that threshold are reported to the government. You buy a new car, which is value about 10 lakhs. It will be reported there. You buy a immobile property, a flat or any land which is above 50 lakhs, it would be reported there. Then there are other investments you are making, high value foreign transactions. If you did a big ticket foreign travel, obviously through unknown sources,
travel agent.
That would, because there are now TDS and TCS rules which have come up. So even those are tracked. Plus the travel agents who are booking your thing are liable to report it. So even that would come up there. So all these transactions would come up there. Purpose is two ways. One, the government to keep track on your returns versus the AISs. So if you are offering certain income in your return, saying that I am earning so much, and your expenses are not in sync with that, there's a huge gap. Like you are traveling huge, you are getting new cars, and there are huge credit card payments, huge investments, and the income what you are offering is much lower. This triggers the government to know that there is some issue, and it will red flag you, saying that okay, we are finding some inconsistency, please clarify. So AIS is one report which will be helpful to the government, but before that, I would say that this is very nice data for you to sit down and compare and prepare your competition. So when you are a novice and you want to say that you want to file your taxes, looking at the AIS is of most important. So something which you may unintentionally miss out in reporting your return, this would be one trigger which could help you out. There was this TDS which is being deducted at source from various incomes, not just your employer, but interests, mutual funds, gains. So a lot of taxes are being deducted from your income at the source. Now you would be interested in taking it back and adjusting it towards your liability. So that statement is the 26AS. That's the name of the form, 26AS, which will summarize the list of taxes which has been deducted on your behalf by your the source. So at the year end, you need to jot down and total it up and use that taxes to discharge your liability. So these are the reports which will help you out. Now coming back to your question of how does someone file using the tools, these reports can be auto-populated in the online utility. So the income tax website allows you to have a pre-filled income tax return.
Okay.
So since few years, government has come out with this data where the return itself will be pre-filled at multiple stages, barring certain information which is not available there. But it would give you a lot of auto-filled data into your return, basis your employers reporting, your interest reporting, TDSs. So your basic data is available with the government, names, addresses, date of birth, PAN. So when someone has this, thought of, fear, I would not say fear, but someone has this confusion of seeing a lot of complicated forms and saying, "Main kaise bharu," and then people walk out. Yaar, itna complex form hai, I will not sit down and fill it. So lot of pre-filled data would be available, and there would be very limited number of columns or sections which you need to refresh it and complete the filing.
That's amazing.
So the whole process is online.
Oh.
If it's a straight return, straight jacket return, it could go through 15 minutes and you are through with it.
One basic question. A person making good salary will not even think of going to a tax practitioner because he has so much on the line. People who are not on a high pay, is it affordable for them? Open question to you. Like, what does it charge? What are the services?
The tax professionals?
Tax professionals, yeah.
Yeah, this is a very major challenge or a kind of a dilemma which everyone as a taxpayer would face. Simply being that, if I hire a professional, there would be a charge. I have just started my career. I am earning limited, and approaching a professional is something like, very for people who are HNIs, high net worth individuals, they may require professional help.
Yeah.
But I would say that it's not the case. You can approach tax professionals. There could be various tax professionals who are there to provide you services. You may be able to choose them to start with. Since you are at the start of your career, there are a lot of tax professionals who have started just now. So that would be honestly the first point of contact where you could approach someone who has just started. He's equally qualified to an experienced one, and probably he would charge very reasonably because he's at the start of his career. Taking a tax professional help is definitely important on two fronts. One, you are getting a very right approach and advice. Two, it is not just about filing the taxes, but planning. So as we had discussion earlier that there are two deadlines. One is the March end where you need to do your investments and planning, and the other is reporting of it, which is in July. Now reporting is something subsequently where something has already happened. But what if someone comes up and guides you that, okay, just before the year end, let's do these things, and you are sorted, and you will have a much lesser tax impact compared to what you otherwise would have paid. So let's sit down before the year ends, do this investment. He guides you, or certain things which you may not document it properly, or there are a lot of things which you can take benefit of.
Right.
Not just the taxes, but your finances. As you all are aware about the concept of family doctor, I would suggest that everyone technically should have a family CA. It's not just about taxes. CAs can actually guide you for your finances, how you are having a lifestyle. I have a lot of clients who may call me up saying that, okay, I am buying this stuff, I am buying this. Does it make sense? People come up that, okay, I want to put my money, I have a spare money, I want to invest in jewelry or a real estate. What do you suggest? Something like that. So over a period, if you have a good bonding with the professional, it's always good to have someone around to guide you, to stop you, to red flag certain things to you. So yes, a young professional coming up just out of, don't think of not approaching a tax professional and finding online tools. But as I said, if someone's from a good tax background, had a bit of a study about taxes, accounts, and the basic ones is also enough. They can definitely make use of those online tools, the income tax website. There are few online websites also, tools which are private websites. These websites sync with the income tax website, and there's a seamless process of filing the returns. So you may not actually feel that you filled up a form. They have a very good dashboards. A lot of websites are available who are made the process so simple that they ask you good questions in a way you would be able to answer, and then they collate that data, put it into the return and submit your return. So the process is very seamless and at a very nominal cost. So someone who's just started can surely use those online websites, take benefit of it and file their taxes. And if you grow, if you start earning good, do approach some tax professional for a long-term strategy.
Yeah, because every penny saved is a penny earned, right? Because the tax professional will have that oversight of understanding how do you maximize your money saved instead of just paying the tax.
Perfect. The cost of non-compliance would be much higher than the cost of a professional help.
Right.
So it's always better to invest.
So if an individual doesn't pay his tax on time, there is a penalty, or what happens to that individual?
Okay. So when you started, you were liable to pay taxes. So when someone says that I have not paid taxes, there could be conditions to it. Like as I said that your taxes are already deducted. So there is obviously some payment of taxes which has already happened. You may not file your return and not report it. So there is a threshold. Any person who's earning 2,50,000, so 2,50,000 a year, below that you are not mandated to file the return. So it's okay because the threshold of taxes is 250. So there is no tax up to annual income of 2,50,000. Those limits could be subject to change, but there's always a concept of threshold remaining in Indian income tax. So someone who's below that threshold may not file the return. It's okay. They are not in a non-compliant side of it. If someone who's above that, the tax has already been discharged through taxes, but he may not file the return. So now what are the challenges or what are the penal consequences? There are major two penal consequences. One is the interest on the taxes. So if you are liable to pay taxes over and above what has already been deducted, so there is interest at the rate of 1.5% per month.
Okay.
So that would be liable up until the point you actually pay it. You may pay it voluntary, or there could be a notice coming up to you and you may then discharge the taxes. So one, interest is liable. Two, if you file it late, I've been saying that the due date is 31st of July for non-audit individuals. So once you miss that bus and now you realize it later after July goes through, and then you feel okay, I need to file, I was supposed to file. There's a late filing fee of 1,000 rupees for someone who's earning below 5 lakhs, and there's a late filing fee of 5,000 someone who's above that threshold. So there's a late filing fee issue. These are the basic ones which are liable to be paid at the time of taxes. Now let's come to a scenario where you have missed the bus, you don't realize it. Government has a data of your spendings and investments, and they feel that you are above the threshold. They would send you a notice saying that okay, you were supposed to file a return and you have not filed it. Now after government points out, there are certain penalties which are applicable over and above the taxes what you pay. Major being a non-disclosure requirements. So as I said, the rates of penalties, the thresholds what I have been mentioning are all subject to change, but the concept remaining same, that these are the penal consequences. And you do have an opportunity of revising your returns as and when you come to know, but there are deadlines to it. So yeah, interest, late fees and penalty are the major consequences.
If someone doesn't pay his taxes, say for 2 years, 3 years, like he has completely ignored that facet of his life, what are so just the interest keeps building up, or the government steps in that, hey, this guy is not listening, we need to now penalize him even further?
Correct. So here the timeline for a particular return is December for that next year. So we have a concept of financial year and assessment year. So when I am saying that return for April 23 to March 2024 is supposed to be filed by July 2024. If you miss that burst, there is a second chance up till December 2024. So but with the interest and the late filing fees. So there's a second chance available to you if you miss the original bus. Post December, the window gets closed. So post that, you are not able to file your return. So currently when we are actually sitting today, the financial year 21, 22, 23, which is April 22 to March 23, the window is closed now. So if you missed previous year's return, you are not able to file it now. If government issues you a notice, the window would open for replying to that notice, and then you will be able to submit those returns, but subject to those penalties. So as I said, if someone has missed the bus after that December portion, only if government opens the window by pointing it out to you, would be able to file the return. Government has now last 2 years introduced one more new system called updated return, which has been introduced just 2 years back. Now this is one major window would be helpful to someone who has missed the bus for multiple years previously. Say for example last 2-3 years, and someone wants to come clean now. So now they have a choice of filing an updated return. But obviously this would be available to someone who has an actual tax liability to be discharged. So for example, if my taxes have already been deducted by taxation, there is no additional liability which I am supposed to pay now, and most of it has been taken care of, or if there is a refund, then I don't have an option to go for updated return. I have to have an additional liability to be discharged along with an additional penalty which is over and above my normal taxes and interest. So yeah, if someone has missed the bus, they can use the option of updated return.
Got it.
Very important, sir, what you just discussed, because personally, you know, I used to work in Dubai before moving back to India after my college, and there this concept is not there of taxation. So understanding this versus how it works in India is very important, because there's no TDS there. It was all cash in hand versus here, and how leakages can be avoided with all this. I think the audience will really enjoy what you just shared about the breakups and how they should approach a tax professional.
100%.
And you also mentioned in the end that, you know, you wear a hat of a wealth manager, sometimes advising. So, but that is not in part of your day-to-day, right, I'm assuming. So, any favorite tax advice like that one must, you know, read upon or
Majorly
how they can improve? Yeah.
Majorly 3 tax advices I would say. One is start early. So you just mentioned that revenue or tax leakages. You are not habituated to tax deductions. You may actually be not aware of how your HR as an employee, your employer's HR is deducting taxes or calculating taxes. So if you start early, exactly from the start of the year, so when I speak about April 23 to March 24, the first month itself, when you are receiving your first salary of that year, April 2023, that is the point where your HR would estimate your annual income, your annual taxes, and start deducting your taxes from that month itself on a assumed basis. So the process is that at the start of the year, your HR will ask you whether you want to go for your old regime, new regime. If you are going for your old regime, then what are the investments you plan to do during the year, and whatever declarations you give to your HR, they would calculate your annual taxes, divide it by 12, and month on month they will start deducting the money. At the year end, they would again come back to you, asks you to give the proof of the investments what you made, actually made. They'll recalculate the whole taxes of the annual basis and then adjust for the differences. So if there has been a short deduction, they would deduct additionally in your April. Say for example, if not you committed to some investment at the start and you could not make it at the year end, then they would increase the taxes and deduct it additionally. So to have your optimum amount of salary in hand, you know the word cash in hand or the salary in hand, to optimize and get the maximum out of it, April is the month you should take professional advice, or you sit down with your HR. In fact, HRs also guide you and see how they have calculated your taxes and ask for legal options to optimize it. I would say legal options to optimize it.
Very important.
And obviously, because the year round, if you ignore that initial declaration, HR would take up the highest rate of taxes. Why would they bother and benefit you? They would take up the highest rate of taxes and start deducting. At the year end, you would feel that, okay, so much of taxes have got deducted at the year end. I would have kind of, simple planning could help me to reduce that in hand optimize that in hand thing. So first advice is start very early. plan your taxes beforehand. That's one. Two, make yourself aware about taking a professional help is one thing, but currently a lot of data, lot of advice are available to fintech influencers, lot of blogs are available. I have always been having that thought that you are the best custodian of your wealth. So don't rely on someone else to save your taxes or save your wealth or optimize it. It is you who are the best custodian of your wealth. So you know your finances, you know your sources, right? You know how you want to have your wealth being created next 5 years, 10 years. So have a long-term window. So sit down and study a lot of stuff. Don't leave it up to some tax professional. They are there, but they may not know your personal choices.
Yeah.
So one, start early. Two, study. Don't think it's complex. A lot of data is available. Three, be on time. So any delay in filing your taxes, in filing your declarations, in making investments, you do not have a second chance. So to optimize it, be alert, be cautious. It's simple, it's not that complex, but it's just that you need to prioritize your taxes over multiple other things you are doing. Your career is important, family is important. Similarly, your taxes and accounts are important.
Right.
Give time and priority to those sections also.
Yeah, you need to take active interest in this. Otherwise,
Yes.
it's like you're running with a blindfold.
Blindfold.
And if you fall, you cannot blame anyone else.
You cannot blame, exactly.
I think this whole intersection of how taxation has evolved and what you explained is great. And in the start of the conversation, you mentioned about artificial intelligence and technology.
Yes.
And in your 20 year of this career, so what has evolved in technology in CA? I know you use softwares, and softwares must have evolved. Tally and Zoho
Yes.
Books, all these companies have come up. Should we talk about that?
Yes, yes.
Yeah?
Very
Or you
nice
wanna-
question
yeah?
to understand how taxes has been traditionally being handled in India. See, our conversation all around India,
Yeah.
so I would kind of try and focus how India has evolved in taxes.
Yeah.
I did my articleship in the period of 2003-4. So it was 2000 to 2004. This was the period which was the transition period. So I have been fortunate enough to witness the traditional manual format as well as the online format.
Okay.
The juniors who were 3 to 4 years down the line to me didn't have the fortune to review or go through the manual process. If you have seen the manual process, you are in a much better way to appreciate the online ones. Just to give you an example, when I was doing my articleship and we were part of a firm where we were filing individual and audit tax returns, the whole scenario was, I would not say chaotic, but the technology was evolving. This was the period when use of computers was started. So it was not that we were preparing manual forms, it was all computerized, but the filing was manual. So we were a bit of a hybrid thing where we were not completely manual. We were using computers to prepare return, but we are submitting it to the income tax on a manual form. My predecessor or my partners who have been into practice since 1980s, they had those experience of using the typewriters and the manual forms where they were filled manually, then compiled manually and then submitted. So we have seen through the hybrid section, it was too much of a paperwork, it was time consuming, huge issue or challenge of accuracy.
Manual error.
Manual errors,
big,
yes, time consuming, huge man-hours were required, army of people was required. So just to give you an example, when I say 31st July is the deadline, the requirement was to have your tax forms filled. It could be manually handwritten or pre-printed. Attach it with your balance sheets, your proof of investments.
Bank statement.
Today the government has access to your investments, as I said, through AIS. That is it. Back then it was not there. So government didn't knew that you have actually invested. So you need to prove yourself that okay, I've invested in this tax incentive and hence I'm eligible for this. So I need to provide those receipts. So it could be huge bunch of papers to be submitted. So there was a manpower who's doing the data entry, someone who's printing it and arranging the sets. Then there were peons and people who used to run to the income tax offices. There was huge line near the due dates. Everyone was rushing to submit their returns on time, and there was an acknowledgement given. Post that acknowledgement, government had a huge task of computerizing that data because it's on manual format. So they need to enter the data to analyze the returns and check the accuracy. So use of manpower on both sides. To complete chaos.
Yeah.
During the last days, I have seen, being a chartered accountant or an article at those stages, we used to take taxis and run around from one income tax office to the other for those submission. On the last 2-3 days, there were mandaps and shamianas being built outside income tax offices. All of the man-force sitting on counters, alphabetically sorted. So you need to find your right jurisdiction.
Okay.
So you can't just go to any income tax and submit your papers. You need to go to the right officer. So huge challenge in finding the right officer, going to his desk, submitting. And as usual, government employees were accustomed to reviewing data and finding faults at that page. So then if you not attach something, they will say, okay, they'll throw it across. Yaar, ye nahi lagaya, barobar nahi lagaya, fir se karke leke.
And you missed the due date.
Huge challenges. So that was one era what we saw.
Now,
2004-5 onwards, the computerization started. There were initial hiccups in filing those tax returns. The website was new. The infrastructure was new, the government's infrastructure. The formats were new in how to report, when to report. But slowly, steadily, after all these years, say 2005 when it all started, the online filing. Currently, I would say it is hugely seamless, very convenient. There were times initially, the manpower what we invested in manual submission, when it became online, there was another challenge of getting the right bandwidth. The internet speeds at that point in time, 2006, 2008, what speeds what we are getting now, the access to internet was very slow. There was MTNL connection. I don't know, youngsters would be aware that, getting a internet was such a challenge that you had to have your MTNL, it was through MTNL or the telephone landline. And there were huge drops, and the kind of speed what we
have now,
we've seen, it could be unimaginable for someone who's seeing the speeds of so huge GBPS or MBPS currently.
Yeah.
So getting the access to the income tax website on the due dates, getting through your returns and submitting in time was a huge challenge. I remember that we used to sit for 2 hours, 3 hours just to log into the income tax website to my login. It went on circle that buffering portion, and after 2-3 hours or maybe 20 minutes, 15 minutes, it was completely crazy. And then you get access to your login, then you again upload the files and file it. So that was one challenge. Currently, it's completely smooth, settled, much easy. So that's the whole process, what we've seen, evolution of technology. Yeah, I missed the bit about the AI now.
Yeah.
This was the how computer or the filing process has evolved. Currently, government is extensively using AI in reviewing the data what you're filing. So where I said that when it was manual, so they could not review, or analyze it or compare it with some benchmarks. Currently, there's a separate department of intelligence, Directorate of Intelligence, then there is technology intelligence. So there are multiple departments within income tax. As I said, the whole machinery in that point of time was involved in getting the returns and data entry. Now that is behind us and we have ready-made data in the government's database. So the whole army of officers which was there are still working with the government. What would they do now? So they are now analyzing the data what you're filing versus lot of other factors and identifying people who would have defaulted intentionally, unintentionally. So any kind of a mismatch, any kind of calculation error, any misreporting, non-reporting is easily detected through AIs. They are getting a lot of MISs internally and notices are being issued automatically. So the officer will get to know of, earlier the notices were issued by the officers. Do you want me to touch about the faceless assessments?
Please.
Yeah, please.
Yeah.
Okay, so when you say faceless, it is very clear about the intention of being a faceless, so you don't have a face of the officer or the tax authority. Earlier we used to meet them, there was a one-on-one interaction.
Not anymore.
There was a personal touch, there were relations being built, there were things being done differently at that point. Not anymore.
Okay.
The jurisdiction is now centralized. So the current scenario in the income tax is that once you file your return is, there's a central processing center at Bangalore, which processes all the tax return across India, CPC what we say, which is in Bangalore. So that's a computerized department which will process your returns. It will throw the basic challenges to you directly and you reply to it and it's all settled. The AI thing and the other scenarios, they would throw notices to you saying that, okay, there's a major flaw, and then you are liable to a scrutiny, which is a process. In that case, earlier when the scrutiny was supposed to come, you need to document all your evidences and present it to the officer, which was a hearing. You know, you would have served hearings or personal hearings. So you visit the officer, you explain the case to him, and he'll assess whether you are right, wrong, or whatever he wants to say, and then he'll pass an order. Currently, it is now faceless. So for example, you have faltered on a major way. You've not reported, say, gain, or you sold a property. There's a big property of 2 crores, 3 crores which you sold. Obviously, you would have earned out of it. You've not disclosed that earning in your return. So then your file will be open up for scrutiny. There would be a notice coming to you. The notice would come online. You are supposed to answer it through your login portal. So your login portal is of most important here. Everything is through that single portal. You report your answers or whatever you want to say about it. There you will get one hearing, personal hearing. That personal hearing is on a video conferencing mode, which is of the government's video conferencing mode. And you don't know the officer. So he may be able to see you, but his video is off, which is by default. So you're not able to identify who's the officer in front of you. You would be able to hear his voice. Second, earlier when I said there was a jurisdiction based taxes. So your officer sitting in Mumbai would assess you. Now it's all open. So the one which I said that will come faceless and to hear you, oral submission, he could be sitting across in Calcutta or maybe in Bihar or Delhi or Kerala. He could be anywhere. It's like an examination. Officer may have limited information about the SSC. He may not have all the information. He would just have pen. He may not know that this is the person whom I am assessing. Vice versa, I may not know who's the officer. So that building of relationship has gone.
Lack of human touch.
Lack of human touch. You can interact, but honestly, this has reduced the corruption, which is a bit of a prevalent over the years.
There's no bias now.
And no favor,
there's no bias.
No favors.
No favors, exactly. So you have limited chance of defending yourself.
It's good.
So if you are on the wrong side, there's a very good chance that you will not be able to avoid the taxes and the penalties.
Because you cannot influence the officer and the officer has nothing to gain from you.
Exactly.
Yeah.
Exactly.
And this started when, sir?
The faceless assessment 4 to 5 years.
Okay.
Exactly.
Okay.
It is being actually evolving over a period. They are introducing it in phases. So currently the first stage of assessment is faceless. There is a pipeline that even the appeals are going to get faceless. So when I say appeal means if you are not happy with the order of the assessing officer, you have an option of appealing it with the commissioner, then tribunal, and there are stages. So even those are now going faceless. Okay. So every year you would find new things coming up, new developments coming up.
This all comes in the technology evolution in accountancy.
Yes.
And
Yes. So huge use of technology. Last 5 to 7 years has been, the changes what we saw over 10-15 years. The last 5 years has seen much more faster and bigger changes than what we've seen over last 15 years before that.
Yeah.
So yes, completely online.
Great.
So sir, now in a scenario where the individual has been working at a particular company and has decided to start his or her own business, at what point do they have to apply for a GST number? Even if the business is small and it starts scaling gradually, how does he go about it?
After last few years and especially after introduction of Shark Tank India and Prime Minister's vision of Startup India, growing entrepreneurship, lot of young or youth are now inclined of working on own, either full-time or on a freelancing basis. So yes, entrepreneurship is here to stay. Not everyone would now stick to that old traditional thing of staying loyal to a particular job. People want to move forward, have their own life. So someone who has just started his entrepreneurship journey or is online or working as a freelancer along with a full-time job has to focus on the right compliances once you move into the businesses. Say for example, under GST, there is a threshold of 20 lakhs for who's providing services. This threshold is annual. So if you are employed somewhere, your taxes on the employment is taken care of. But whatever earnings you are getting out of your freelancing, professional consultancy, working separately, it could be anything. The threshold, this is very basic threshold. You may deep dive once you are getting into the type of entrepreneurship you are into, because it is not that clear. But you can say that, okay, if you are into services, there's a threshold of 20 lakhs. If you are into goods, if you started selling something apart from your, then the threshold is 40 lakhs. So once you cross that threshold, you need to register for GST and start the compliance under GST, which is filing your monthly returns, filing your annual returns as per your threshold limits. GST compliance may seem to be easy, but something very different from income tax. Income tax is an annual phenomena where there is just one or two deadlines you need to meet and you do it once in a year. But GST is a transactional compliance. So each of your transaction has to be compliant with GST rules. If you are giving a particular kind of a service to X, the tax rate would be something, and the same service if you are providing to some, say for someone outside India, or if you are providing to a SEZ unit, a kind of a special economic zone, so then there would be different taxes to it. So it's not a straight jacket rate, there would be changes across transactions. So when you cross that threshold or you are nearing that threshold, so someone has to be very attentive and keeping track of receipts during the year. So within the year, if you feel that you are now reaching that threshold, you should immediately take up the compliance consultant, reach your consultant and start complying. GST, once you are there, you have crossed that threshold. Compliance, return filing is one, and account due diligence and account discipline, I would say, is also important. You need to update your records through use of various tools. You may use Excel, you may use multiple online accounting tools which are now available. You can use simple to use softwares for the purpose. But the important point is you need to be updated at least on a monthly basis, track your receipts and see if you are required to do any particular compliances. So that's where you need to see if you are liable to GST. Secondly, once you start growing, you may hire people or you may employ services of someone else on maybe part-time or a full-time basis. There would be labor laws or some other compliances which would involve there. So someone has to be aware of those once you start doing that. From income tax perspective, going back to what we have discussed separately while you are filing your returns, your taxes on your employment would be covered. But now you need to sit down, see what receipts you've done during the year, analyze it, see what taxes are applicable to that and report it correctly. Once you enter the head of business and profession, there are 5 heads of income: salary, house property, capital gains, other sources. But the most complex section is the business profession. When you look at the number of sections allotted to business professions are much higher than the other sections because of the complexity of business. So to start with, we should not kind of worry or be a bit jittery about the taxes. But once you cross a particular threshold, I would suggest to take professional help and be on the compliance side of the whole it.
Sir, you mentioned special economic zones. Recently in the news, we saw a lot of mention about Gift City, which is in Gujarat. Do you want to touch upon how the Indian government came up with this concept and why they even came up with this concept of Gift City?
This is a very nice thing which the youngsters or people who are not from the finance background should be aware of. Gift City is a name to a particular section in Gujarat, but primarily it is a special economic zone. So there is a concept which is very old. So Gift City has come up recently, which is a particular thing in Gujarat, but there are multiple economic zones across India. People from Bombay would be aware about SIBS, which is in Andheri East. Now, a special economic zone is an incentive or a concept which is been given by the government to incentivize people who are giving special services. Software is one. There are multiple industries which are based out of those special economic zones. Now this zone act as a territory within India, but technically on legal terms it is outside India. So when you are entering a special economic zone, so someone goods is entering in a special economic zone, it is going outside India. For taxation purpose, physically it may be within India, but it is a cordoned and bordered zone or a demarcated place. Anything coming out of that is treated as export. So when you are buying something from SEZ, it would be par with imports into India. Now why the requirement of special economic zone? This is primarily to incentivize people who are focusing on sending goods or services outside India and earning foreign exchange. So the most important point is to bring the forex into India and avoid going of forex outside India. Governments are interested in increasing their forex reserves. So when you are sitting within India, you are managing your businesses from India and you are getting the benefit of exports. The major advantage what the government gives or incentives is tax incentives to units which are formed within SEZ unit. So GIFT City is one of those economic zones. So if you are setting up a business within that zone, you get tax incentives, you get relief from lot of local compliances. So if you are say setting up a business or an office or a factory within the Indian territory, there are lot of local laws which are supposed to be complied with. You get exemption from all those hassles. There are a lot of other, it's more like a comprehensive unit where it's like a city where a lot of things are within that city. So you could find residential places, you could find schools and other things. So you are actually within India but getting tax benefits while remaining there. GIFT City is the one which is coming up in Gujarat, which is already operative. There are huge, great infrastructure which has been developed there. You get foreign banks available there. So this was from Indian perspective. Similarly, someone who's outside India, an entity outside India would like to set up their offices, branches within India, but not subject to those complex laws of Indian territory. They have special package of tax laws applicable to them. So to bring people to India, bring investments, FDI in India, GIFT City and similar SEZ units are a major way of attracting these investments.
And in the new latest tax budget, would you please share your insights? What were they changed?
Yes.
Yeah.
So the budget which came out in 1st of February 2024, because this is an election year, there's been a tradition or in fact a constitution law saying that because there's an election coming up, the government is not allowed to come out with a full budget. So they will not, they cannot and will not kind of declare very good incentive schemes just to ensure independence and not to influence the voters. So that is the reason the February budget, we are seeing the elections in May 2024. So this is called a vote of thanks. So you would have, kind of listened to this. So this or the other word is interim budget. So what it says is that to continue the government. So when there was a 2023 budget, the government was allowed to expand something and collect something. To renew that permission to allow and continue something, they had to go through this process of interim budget, where the government tables their revenues and projections, but they don't come out with major changes. And the full budget would be out in June once the new government comes into the place. That would be the regular budget in the June 2024. Coming back to the current year's budget or the just interim budget which has been declared, since not major changes have come, but there are two important changes which the government has come out with. One is a major change is the issue of tax outstandings or the demands which were pending since ages. So as the finance minister Srimati Nirmala Sitharaman mentioned on the floor of the parliament, saying that there were cases pending dated back to 2002, 2000 and they are still there. The major reason being there was a transition from manual to online thing, and lot of tax demands which were there on the desk of the officer were supposed to get transition into the online system, and there were major mismatches in that, and hence there were pending demands. also there was demands due to certain mismatches of the hybrid system. To overcome those demands and to simplify the pain to everyone, including the government and the taxpayers, they have come out with a scheme wherein any tax demand for an individual before 2009-2010 up to 2009-2010 amounting to 25,000 rupees a year will be completely waived off by the government.
Okay.
So they would clear their records saying that this tax demand is now not more enforceable, and they will not pursue that recovery of that demands. And any demand from 2009-10 till 2020-15 up to 10,000 a year would also be waived off. Per individual, the whole waive off cannot exceed 1 lakh. Okay. So that's what upper limit. So something like everyone having all years demand, they cannot take that huge benefit. This new amendment will benefit, as per the Prime Finance Minister, that more than 1 crore of taxpayers. So this is very welcome move. As a practitioner, we were having huge challenges looking back and getting those old demands corrected because of non-availability of data. So this is one good change which has come up. And then there is a relief in surcharge, wherein the higher incremental surcharge, which is goes up to 37%, which was causing a huge tax rate, effective tax rate to the high HNIs. So, and there was a bit of an anomaly in the incremental income and the increase in surcharge. To stabilize that, there is a mechanism which would be coming into force where they will stabilize that charge of surcharge. So these are the major 2 changes which has come through this interim budget.
So HNIs have more of a motivation to earn money now.
Yes.
Yeah.
And simplification. That is another perspective where people are clear what taxes we are supposed to pay. There is no anomaly. There is no ambiguity about what I am supposed to be paying to the government.
Right.
Amazing. And I think, we should ask Mrinal sir that to all the aspiring students out there and upcoming CAs, what would you advise them? What is the importance of a chartered accountant, his role in the society? We would be honored to hear it from you. Great. And, motivate the students out there.
So this is one of my favorite areas or discussion. Whenever I meet young students or whenever I have my own team who's working with me, and when we find time, we always discuss this. That chartered accountancy per se as a course has always been looked up as a bit of a difficult course and difficult to pursue. But I would like to communicate or inform that it's not for someone who is very smart or above average student. Even students with average or performance over history have done very well in this course. This course is more about consistency and discipline. So if you are not been a rank holder or a very bright student over the years, still you can pursue this course and come out very good marks also, and within time frame, if you are persistent, you are disciplined, and you have this knack of going deep diving in a subject. So someone who would like to float around and just have a basic knowledge about putting and won't have that patience of going and studying a subject in detail, it would be difficult for them. But someone who's interested, this is one of the good courses in the country. One of the biggest advantages is the cost of education, which is probably the least among all of the courses available. Okay. If I take a threshold, any basic MBA would cost around 8 to 10 lakhs minimal, depending on the institute, to start with. A medical course could go up to crore.
It's endless.
To endless. But if as a chartered accountant, you take basic tuitions and do your study, you could do the whole course within 3 to 4 of lakhs. That's on the higher side. The institute charges very basic fees for registration and exams, and then it depends on the coaching you take. Coaching is a substantial, just a support. It's more of self-study. So to take it, if someone is aspiring to become a chartered accountant, definitely this is one of the best course, and with lot of opportunities once you clear the exams. So the opportunities are endless, not restricted to the traditional areas. There are a huge number of areas which has come up now. So if someone is thinking of it, definitely I would suggest subject to, as I said, patience and discipline.
Yeah. I mean, these guys don't have to like restrict themselves to thinking of chartered accountancy as something which is just filing accounts. You can go and become the CFO of some major corporation as well.
Entrepreneurship. I would just like to add that as a chartered accountant, if you enter entrepreneurship, if you have your own business, I would like to give you examples of a lot of my friends. You know, I am actually an exception who's still into the traditional practice. A lot of people, friends who have qualified with me, most of them are either in corporate or entrepreneurship. People have, you know, gone into areas of food industry, textiles, you know, anything you could think about. They have entered those sections as entrepreneur, either on their own or joined some firm, and they are doing hugely well, hugely well. People have migrated outside India, done completely different courses, but the study and the experience what they have earned has come out you know, as a huge advantage to them in their field of expertise. So if you start your own business, you are in the right position to plan your business, budget, the growth strategy, everything. So yes, a lot of areas open after you clear your CA.
And what would be one of the biggest myths of being a chartered accountant that you would like to bust?
Another good question. There are a lot of myths associated with our profession. One being on the ethical side, or the this thing that chartered accountants are meant or supposed to help in saving your taxes, both legally or the other way around. But I would like to add that first, the course or any profession, the chartered accountant, any chartered accountant, once they get that degree and they get that membership number from our institute, which is our alma mater, they are bound by the code of ethics. So someone who's not into practice, he's just qualified as a chartered accountant, even he is supposed to follow a bit of a code of ethics, starting from a bare minimum of not marketing yourself. So when you see someone using the word prefix CA before his name, there are a lot of conditions attached to it before you able to use that CA. So you cannot freely use that word CA before your name. That's one. So you know, a small thing like this, up to going that as a chartered accountant I may have a good practice, but I cannot market myself openly or indirectly as well.
Why is it like that, sir? Why can't you market yourself?
So when I come back to the taxation and audit profession, that's a requirement once. So okay, let's take it this way. There's, after clearing CA, there are two types of members. One is people who are practicing and giving their signature. So you know, we all have this concept that CA ka sign ka value hai, something like that. So not every chartered accountant by default can sign documents. So after clearing your CA, you need to take up something called certificate of practice, COP, what we call. So not every chartered accountant who clears the final exams can, you know, start signing balance sheets, start signing you know, documents and get that recognition. The recognition is restricted to people who are taken COP. So as an auditor, when I am signing balance sheets, first I need to you know, register myself as a certificate of practice with the institute.
Okay.
So once I take that up, I am abided by that. And as an auditor or a consultant, we need to be independent. So when investors rely on a balance sheet and do some investments in a company, or banks rely on the balance sheet while giving loans, so they rely on the auditor's consent or the opinion saying that the balance sheets are true, fair, and you know, done in a proper way, or the figures are acceptable, they are not cooked up or something like that. This is very open language which I am trying to say. It is a bit more concerned. So when I say, coming back to your marketing question, to allow that independence as a chartered accountant, that you know, I would not go beyond or help out my client and help him create some picture. I should remain independent. So one, marketing is not allowed to maintain the independence as an auditor.
Okay.
So I can get clients through you know, mouth publicity. There are limited ways in which I can subtly market myself, but majorly I can go outside. So coming back to the question that, you know, how CAs can be perceived, or there's a myth, is that one, we are not just tax planners. This is just very small facet of a chartered accountant. Chartered accountants per se, one, they help the economy by guiding the businesses, take a lot of decisions, help them get finances, Then they are around for collection of taxes. The first question where we started that why taxes are required is for the continuation of the society or well-being of the society. Now the government gets a satisfaction that right taxes are coming to me is because there is a intermediary or a chartered accountant who's sitting down with the taxpayer and understanding his finance, guiding him to pay the right taxes. One, and on time. So government just doesn't need money, it needs money on time. So every quarter you pay advance taxes, TDSs. So one, the chartered accountants basically are not just tax savers or tax planners. They help you grow your business. Two, they help you grow your finances. They give you wealth advisory. Then one is arbitration. A lot of chartered accountants into arbitration. Apart from this, all these things, when it comes to the society at large, there are a lot of associations of chartered accountant as a non-profit organizations. I am part of few associations, one of them being Bombay Chartered Accountants Society. Then there is Jain Chartered Accountant Federation. There is Chamber of Tax Consultants, and host a huge number of associations across India, locally as well as across India. All these associations are voluntarily working towards development of the profession per se, first by educating the chartered accountants on the complex tax issues and financial literacy. They do a lot of seminars or talks with colleges, schools. A lot of publications are there which guide people around, blogs, internet. There's huge stuff which is done voluntary by chartered accountant. So when I am part of certain associations, I don't draw any salary, and there's a huge time content we give to that association just out of the love of the profession and the society. Simultaneously, these associations also do charities. So these are all charitable trusts. They do a lot of blood donations, help the society at large. So yeah, chartered accountants are not just tax professionals. They do a lot of things beyond that.
And so, like, if you have to advise that upcoming chartered accountant or the person who is interested in this field, what are the ethical pitfalls to avoid, or what a chartered accountant shouldn't do? If there would be like a few points you'd like to tell them.
Great. So with the limited experience what I have gained over last around 15-18 years, and I've been part of certain associations, what I've learned per se is one, avoid the attraction or that of fast money. So once you are a chartered accountant, obviously you get that recognition immediately. So after your results are out, people try to treat you very differently. You would be treated a bit differently with respect. There would be different approach how people have been coming to you. But avoid the temptation of faster growth. Be consistent. Have a long-term view. You would have a lot of opportunities to yourself in industry, in practice, lot of things. But have a bit of a long-term approach to your career. That's one. Two, the profession or the tag comes with a lot of responsibilities. Once you say something on personal front, on social media, you come out with some videos, you do a lot of stuff, you do a lot of interactions at social gatherings. That would come with a tag कि एक CA ने बोला था, मेरे को एक CA मिला था, उसने ऐसा बोला था, एक CA ने ऐसे पोस्ट किया था, which comes out with some authority saying that अगर CA बोल रहा है तो सही होगा. So whatever you are, your interactions should now be filtered. That's two. And third, be independent. As I said, not just if you are an auditor, but if you are consulting a firm. There's a huge trust which the businesses give to your opinions. Definitely, you should come up or live up to your tag of CA.
Yeah, don't have a hidden agenda.
Very important to do that. Yeah, very important to do that. You would grow, you would get good opportunities. There are a host of work which is available. Currently, there are 4 to 5 lakhs of chartered accountants across India. So you can understand the scarcity or the limited species which it is. Yeah. So there's a huge opportunity. There's no dearth of work. If you give good services, your services will be your marketing tool. Rather than actually going out and saying something that I am able to do that, your services, what you give to your clients will get you new clients.
Yeah.
So yes, have a long-term perspective and live up to your profession.
Yeah, like you beautifully put it, sir. Having a long-term perspective is so important because there's no shortcut for goodwill,
Yes.
right? You might get 1-2 good projects and you might ace it in that. लेकिन आप third project में excited होके if you mess it up, then it's gone.
It's gone. It's gone.
Yeah.
We've seen there are once we have come up to this issue, there have been a lot of news around chartered accountants in last few years. So if you come across any kind of a scam, a fraud, or some kind of financial issue or financial non-compliance, the first one who's being blamed for right or wrong reason, I would not defend someone, but the first one to be blamed would be the chartered accountant. So if we've seen a lot of huge value scams coming up in the newspaper, if you are looking at the names of the accused, you know, apart from the ones who are directly involved, could be the founders or the directors, there's always this name of the auditor.
Yeah.
We may not know the right facts of the cases, but by default, the auditor would be tagged because there's a huge responsibility and the liability which the government and the citizens are given to a chartered accountant.
Right.
कि भाई आप हो तो आपको ध्यान रखना है. You cannot go away with just saying that I had to do. Though that comes with riders that the auditors are not supposed to know everything. We have a concept of test check inbuilt in our processes. So as an auditor, we review it not in detail but in an overall perspective, and we take our satisfaction out of what is reported to us. So not always if something wrong happens, the auditor is responsible or is part of connivance with the founders. A lot of times there are auditors who have been good at their work, they have documented it well. Still, being a person who is part of the signatory, you are liable. So if you are looking out for this course, you have to do your bit very diligently. The institute has given very specific instructions on how audit is to be done, how returns are to be. There are standards on accounting, there are standards on auditing. If you follow diligently those and if you've done your stuff, documentation, barring the initial challenges of, you know, if something goes wrong, in a long term you would be saved if you have documented well on these fronts.
So you're the police of the finance world.
Definitely yes. We are, you know, there's a term called watchdog.
Yeah.
So we are not bloodhounds. We are watchdogs of the economy. We are there to point out that there is something going wrong. But we are not supposed to investigate in deep dive because there are separate agencies to do that. But yes, as a chartered accountant, it's upon us to definitely point out and kind of bark out saying that, okay, something wrong is going on. Please, you know, report it or, you know, go here and just find out what's wrong here.
Yeah.
Sir, thank you so much for your time and, you know, providing us with a very detailed explanation on all things in accounting.
Yeah.
I think it's given us a new perspective and also the importance of being a chartered accountant, the implications of not filing taxes on time, and I hope that the audience really enjoys this episode, and really thank you so much for your time.
Thank you so much,
Thank you,
sir.
Harsh. Thank you, Darshan, for this wonderful opportunity of interacting with the youth. I know we always look forward to such interactions. We've been doing a lot of things offline as well, visiting colleges for financial literacy. And I'm sure this social media is the best means to reach out to the youngsters at large.
Yeah.
And just the last advice that yes, don't treat taxes or accounts as an obligation or a burden. This is for you, for your growth, very systematic growth. So yes, we look forward to all of you increasing the tax base of the country.
And being responsible citizens.
Yes.